joining us is Tony Morris. Tony's Head of Interest Rate Research at ANZ. Tony, thank you very much indeed for joining us. Let's talk a little bit first up about the minutes. What did we learn from them?
Not too much in terms of how it compared with the original statement that came out after September the 6th. We've had a few developments since then, of course. It might be material. That's a darkening of the international outlook. We've seen a revision to the CPI. Also, we've seen a bit of a rise in the labour market, and I think they've flagged a little bit of that in the minutes. There was one interesting piece of new news that they were talking about market pricing. Remember, the market's here pricing almost a 1% cut in interest rates over coming months. They mentioned that there were some technical factors driving that they weren't taking too much in terms of what that was concluding for their own outlook on policy. Overall, maybe a slightly dovish tone to it, but they're certainly not ready yet, or don't appear to be disposed to be considering interest rate cuts anytime soon.
What about most people thinking this is going to happen in probably December? Would you go along with that?
Oh, well, it's going to be very interesting now. October doesn't appear to be live unless there is some new development on global markets. We'll get very important inflation news at the end of October. So I suppose that makes the November meeting live if we do see some very weak inflation numbers here, and the international outlook has deteriorated somewhat. So maybe November may be a little bit more live. But clearly from those months on, depending on the evolving outlook for growth, they're going to be some consideration of whether there's some sort of insurance cut. But they still sound pretty upbeat in terms of the medium-term outlook for the economy here, and they've still got some concerns about inflation. Of course, if growth slows, that'll address that inflation story.
Tony, they've got concerns also about unemployment as well, and I've got one comment here saying that they are seeing a rising number of firms reassessing hiring plans. Now, we had that surprise uplift in unemployment the last time they came out with figures. Do we see more of the same?
Yes, and I think they've put a lot of weight in terms of their liaison. What we have been seeing in our economy, of course, is still very strong investment intentions profile. And if anything, that's strengthened. They feel more confident about that. But it's the painful restructuring, and they make reference to that in these minutes elsewhere in the economy, particularly for manufacturing, tourism, maybe not so much on retail. So it's those numbers there that's going to make it important. I think the key assessment here then is how far is unemployment going to rise and how quickly. If it starts to look as if it's rising maybe more quickly than they thought, then clearly they've got a lot of scope to respond, and that's another message that's come out in these minutes. Got a lot of policy flexibility here in Australia.
Right. Tony, I want to move to another central bank. I want to go to the Fed this time, meeting taking place this week, two-day-long meeting. Now, what do we get out of it, and do we see more bond purchases?
It's looking increasingly like there were two sort of major areas of focus going into the Fed. One was this extending duration. That looks increasingly like, it's going to have quite a bit of ammunition at their disposal to try to lower longer-term rates. Probably a little less focus on cutting the rate on excess reserves. It's going to be very interesting to see some of the dynamics within the Fed in light of the votes or dissent that we've been seeing recently. But I think the market now looking for that sort of support. That's not going to be too much of a surprise. There's only a limited amount of stimulus coming from the Fed in terms of monetary policy, much more focus on Europe and perhaps on fiscal policy now and what they can do in terms of providing more fiscal support longer term. It's going to be positive for bonds with the backdrop of this environment, what's going on in Europe.
Yeah, I mean, and let's just talk a little bit. It is our top story this morning. Can you just tell us what you made of this downgrade coming from Standard & Poor's for Italy?
Yes, I mean, everyone was waiting for the Moody's, but S&P sort of almost raised the ante, if you will. I suppose it certainly does. It's not helpful in this environment. Everyone knows that the focus is on how Europe is going to navigate the issue between austerity and trying to get the growth. So it's certainly not helpful. I suppose also you can view a lot of the ratings actions at the moment to be almost pro-cyclical. Whilst it is negative for sentiment, I think we've got some sort of assessment of limited impact here. These sort of actions are not going to be a surprise, and I think the focus now is on how the policymakers respond to the challenges on them. So whilst it's not helpful and it's been negative on confidence, perhaps the markets are putting in a little bit more context.
Nice one, Tony. Thanks a lot for joining us. Tony Morris there from ANZ.